As the Market Day Report continues, John Jenkinson with you. In just a moment, we're going to visit with Todd Bubba Horwitz with Bubba Trading about all of today's activity, get his thoughts. But first of all, let's bring you up to date on the latest May delivery information that we have for delivery. Now, 590 contracts for corn, soybeans 876, Chicago wheat 30. So not a whole lot of activity here this morning, and the grain market kind of coming back from lower prices earlier this morning. Corn market still on the negative side here as well. About 30 minutes ago, the only thing we saw pop up on the positive side was the Kansas City wheat market. Right now, July corn down 6 3/4 at $3.64. New crop December's down 5 3/4. July soybeans down 11 3/4 at $8.30 1/2. New crop November down 11 1/2 at $8.52 3/4. July Chicago wheat now up 1/2 at $4.38 1/2, and we are off of the low, $4.28. In fact, we're only 1 cent away from the high end of that contract. July Kansas City wheat now up 2 1/4 cents at $4.03 3/4, and that's 3/4 cent away from the high. July Minneapolis wheat down 1 3/4 at $5.13 1/4, but closer to the high end of $5.14 3/4 than the low side. But the cotton market still on negative side here. May down 2.38, July down 2.20. And the new crop December down 161 at 72.84. And here with us is Todd Horwitz with Bubba Trading. He joins us now. Well, Todd, that tweet certainly sent a ripple effect through a lot of the markets this morning, but we're seeing some of that already start to come back.
Good morning, John. You know what? I would say this, and I think you got both of my texts overnight and this morning, and it was really probably a buying opportunity. I think that, again, that might have helped put the lows in finally. I think when you look at corn, I'm confident that corn and wheat have reached their lows, certainly wheat being higher in the day. Soybeans, again, they need to stop making new lows before I'm willing to commit and say those have made lows. But certainly corn and wheat look really solid after the overnight action and where we are now. And again, this is just posturing in my opinion. I think that the deal gets done either way, as we've said repeatedly for months. And I think that when it's done, these prices will be higher, and we'll say, why didn't we buy the lows?
What are the fund managers saying at this point? Are they just kind of sitting back waiting to see what could happen next, or what's the latest?
They're still trying to hammer them down, but I think that they're going to get, again, I think they're going to get it turned around here and get a shock when you start to see it, when the deal finally does get around and we actually start to see some real volume and some real trade coming back into it. You know, we've been in a very quiet market, a very quiet, dull market for quite a while. And I think last night showed some action, and this morning, of course. And I think when you start to see this action come back, I think they're going to be forced to cover, and I believe that they'll actually be the propeller of this rally that will actually force it higher.
What's your thoughts on crude oil here? Because crude oil also went quite a bit lower, went down close to that 60 level, and now it's just kind of hovering around there.
Well, it's funny, John. It went right down to our low, our first target low, which was 60.04. Actually, 60 was our target, but 60.04. And now we rallied all the way back. I think now, again, I think it's another sale. I think now the next time down we'll go below 60 and go into 58 to 57 as the next target down. Again, especially when you want, whatever side of the market you want to be on, you don't want to see it go straight there. You want to work longer there because the trend becomes much better and much more powerful in the direction you're looking for. So I think we'll see a little bit of rally, which we've gotten, and I think after that you're going to see a push down under 60 on the next round down.
Okay, Todd, we're going to take a break and come back and see what you think of the livestock market. That's straight ahead here on the Market Day Report. Last week's cash cattle trade happened, basically the biggest percentage of it anyway, happened on Wednesday, right in the middle of the week. And then there was a little bit of cleanup trade on Friday, and it was basically steady with what had happened earlier in the week. Now we're setting ourselves up for this week to see what happens. Show list is out today, and the futures, well, they're on the lower side. We'll go to the live cattle futures here first. And right now we've got the June fats down 30 at 113.13. August down 60 at 108.55. And the October down 70 at 108.97. Now let's see what's going on in the feeder cattle market. This is a market also that had triple-digit losses in a couple of the contracts. Right now, though, August is the only one. It's down 120 at 145.18. The September down 88 at 146.28. And then the October's down 70 at 147.07. Lean hog complex started out, locked limit lower. That was the opening calls. We're still there. June down the $3 daily limit, 89.75. Nothing new to report here. July down the limit, August down the limit, October also down the limit. Let's go back and visit with Todd Horwitz at Bubba Trading about all of this. Todd, here we are. This hog market really read a lot into the tweet here this morning, but there's been a lot of volatility in this market lately.
Well, John, again, I don't think it's any real surprise. You and I talked last time, and I said we're targeting 86 to be buyers. So one more limit down day, and we can get in and start buying again. I think you've got an extremely volatile market. And even with the tweet, what happened to the African swine flu? This is why we don't trade on the news. We have to trade what the money tells us to do, because, again, we've had this big, wild, sweeping back and forth. And, of course, I think now we're just heading to the bottom end of this channel. Last week we got to 87. I think 86 is a number where you get a chance to get them back and see them go back up to the top. But I think you're going to trade in this wide range between, let's say, 86 and 100, or 86 and $1 between now and until we break out one with the other. And, of course, they still look pretty solid from a trading standpoint, and from a bullish standpoint. I think hogs still look good. I think cattle may have made some bottoms today, and I think that's what we're going to watch very closely to see if the fats and the feeders have actually put some bottoms in, because they really got ugly down 10 days in a row.
What do you think of the demand so far in both of these proteins?
Well, again, I'm looking at the actual money flow that's going in, and it has been just really brutal, which is saying that there's some more weakness coming. So I think that you're going to see demand pick up. I think you're going to see prices pick up. But again, we have to form a solid bottom before we can actually say we're going to go much higher from here.
Okay, Todd, always good to talk to you, and we'll have you back this same time tomorrow to visit more about the grains. Todd Horwitz, Bubba Trading, here with us on the program. We got brand new information on the beef cutouts and the pork cutouts to share with you this time around. The beef cutouts on the higher side. The choice up 59 cents at $227.95. The selects up 14 cents at $213.43. The pork cutouts at midday report, all mostly higher with the exception of loins. Carcass is up 154, the loins down 58, but the ham's up 226, and the bellies rallying higher by 9.95. Christina.
All right, thank you, John.